Welcome to another presentation of Capital Economics. The title of this presentation is Initial Jobless Claims, and today is Friday, April 24th, 2020. Thank you so much for joining me. As you can see in the backdrop, we have a Help Wanted sign. Of course, that's typically for employers looking for employees, but I think in this context, it's a different type of help that is in desperate need. And the solution is free market capitalism. I do believe what is taking place right now with the current programs being implemented from the federal government and the Federal Reserve is all but guaranteeing and solidifying that a severe recession is now going to turn into, unfortunately, a depression. And this is predicated off of historical context. If you look at the Great Depression of the 1930s, that, for all intents and purposes, would have proven to be a severe recession. But the government, thinking that it had to come in to save the day in all of the policies that they enacted, it solidified a Great Depression. It turned a severe recession into the Great Depression. And I am of the mindset, based off of historical context, that that is exactly what we are going to end up with this time as well. And that is a very unfortunate set of events. So I wanted to do this presentation just to give the audience a visual, because there's a lot of talk in the financial media, all media, about what is taking place in the economy. And I just wanted to provide a little bit more context, a little bit more color with this by providing some graphs and charts for you to look at, because they're staggering. They're staggering. The numbers are off the chart. So let us begin with some of this. So these are initial claims. This is a weekly data set. This is what the media has been talking about heavily for the past month. This is for the entire United States of America. I went back to January of 2007 just to provide a little bit of context, because even in the depths of the great financial crisis, which of course is indicated by this vertical shaded bar here, and of course the width of it is the duration of the great financial crisis, we aren't even close. I mean, we blew past it. You have the great financial crisis. The peak was about 660,000 Americans filing for unemployment insurance in 1 week. During the depths of the great financial crisis. We're now 10 times that on a weekly basis. 5 million, 6 million, 6.5 million. The number we got this Thursday, yesterday, was 4.4 million, far eclipsing it. I mean, and you see it. I mean, this is just straight up. This is a hockey stick-shaped graph here. This is just to the moon. And again, this is weekly data. So it's not as if this is back to where we are. This is just last week's number of how many Americans filed for unemployment insurance last week. We got that number again yesterday, 4.4 million. So this is cumulative, all of this data. And I'm going to skip to the next chart. It's the same data, just on a different time scale here, just going back to January of 2019, so you can still get a better picture of what's been taking place over the past 5 weeks. Now, before all of this took place, you're talking about a weekly number back in March 14th of 2020 at 280,000. 280,000 was the number. That's where we are, right at the bottom here. And then obviously we skyrocket. 6 million, 6.5 million, 6.6 million, 4.4 million. That's where we are. So you have to understand the numbers. From where we were during the great financial crisis, up until this point, the United States economy, in aggregate, created about 21, almost 22 million jobs. Over the course of the last 4 weeks, all of those jobs, for all intents and purposes, from a numbers perspective, have been lost. They are gone. Now you tack on the additional 4.4 million that we just received yesterday, you far eclipse it. Now we are standing just in the past 5 weeks. 26.5 million Americans have filed for unemployment insurance. And of course, this is a cumulative total, folks. Unless people have found jobs in the interim, these are people who have filed, and it all gets added up. That's where you get your 26.5. But the 26.5, again, is just the past 5 weeks. You still had Americans who were unemployed prior. Okay, so we are already starting to see numbers that eclipse far and above where we were in the great financial crisis. We are now more reminiscent of numbers that we last seen in the Great Depression of the 1930s. Okay? This is very unfortunate data, very unfortunate circumstances, but this is the reality. This is simply the 4-week moving average of initial claims, which again is going to follow the same thing. A lot of people like to follow these moving averages because it smooths out some of the volatility. But when you're talking numbers of this magnitude, you're going to again see this type of takeoff on the graph. Okay, so I just wanted to provide that for another visual as well, but that is the 4-week moving average of initial claims. Of course, these numbers are going to start falling off. They're going to start plateauing because there's only so many more jobs that remained left in the economy for people to leave. And of course, you still have those government programs that are out there implemented that are allowing and giving money to small businesses primarily to keep employees on the payroll. Now, they might not be working because they're locked down, but nevertheless, they are still going to be counted as employed because they are on the payroll. Okay? They might not be working, but they are considered employed. So that's skewing some of the numbers as well. And then this is a little bit on the political side of things, because if you go back to that phrasing, that saying, it's the economy, stupid. Well, this is 2020. We are in the midst of a presidential election. I know that's sort of on the back burner, but nevertheless, that is the reality of 2020. And this is the initial claims for what I am terming the blue wall, which is what it's pretty much called in the media as well. And we're focusing here on the states of Michigan, Pennsylvania, and Wisconsin, because these are typically, when it comes to presidential elections, pretty much in the pocket of the Democratic ticket. Well, that wasn't the case in 2016 because Donald Trump won all 3 of these states, Michigan, Pennsylvania, and Wisconsin. He won them by a razor-thin margin, but a win is a win, and that propelled him into 1600 Pennsylvania Avenue. Now, of course, we have a pandemic. We have COVID-19. Will the president be blamed for this, or will the voters in these respective states and others as well, but primarily in these ones, this is what we're focusing on right here, will they give the president and his administration a pass? Will they say, well, you didn't see this coming, no, but nobody could have seen this coming. He's doing the best he can, and we think his plan for the future after COVID-19 or dealing with it thereafter, he's the man for the job. Or will they say, I lost my job, can't find another one, the president and the administration botched the whole thing, he's got to go. We're going to find out in November. But if it goes back to the economy, stupid, how are voters going to look at all of this? Okay, now, just for the context of looking at this graph, the left-hand scale refers to Michigan and Pennsylvania, the blue shaded lines, and then the right-hand scale represents Wisconsin claims. And again, we went back to 2007 just to bring in some of the recessionary effects. And you can see how these states pretty much trend together, which is no surprise, especially in such an environment as the great financial crisis. And it's no surprise that we're all seeing the huge spike once again in these respective states as well, with Pennsylvania being the worst of the 3 states, primarily on the back of the energy, the shale bust that we are also in the midst of. Pennsylvania was obviously one of the beneficiaries of a lot of the fracking and the natural gas because of all the technological advancements, and now all of that is sort of coming to a head as well. And again, the same graph, but just with a shorter time horizon, so you could better see this sharp increase and then a little bit of, again, a pullback, but this is all cumulative. So these are staggering charts. The data is off the charts. We have not seen these numbers since the Great Depression. I am of the mindset, which I discuss with my audience on the Capital News podcast all the time, as I've stated at the top of this presentation, that the solution is free market capitalism, that the government has to get out of the way. It was the cause of a lot of these problems. The pandemic, COVID-19, was the pin that pricked the everything bubble. What we are in the midst of is something that was likely going to happen anyway. It was just going to be a different first push. Maybe a company would have went bankrupt. It would have been something, but now we know it's the pandemic, and now it is revealing all of the weakness that existed within the system. And now with the federal government and the central bank, in conjunction with other federal governments and central banks around the world, is all but guaranteeing that what would have been a severe recession is now going to turn into a depression, because they're kicking the can further down the road. They are propping up companies that most likely would have went out of business, which is what they have been doing for years anyway, as a result of zero and negative interest rate policy in conjunction with other policies. Not good. Not good. The only solution, in my opinion, is free market capitalism. Let the markets solve this. It is not going to be easy. There are no easy solutions to all of this. But there are things that we can learn from history, and right now we have not learned our lesson, and unfortunately we're most likely going to continue to pay the price of a lack of education. So that's that. I just wanted to provide a brief update with this presentation because there's so much news being thrown around, a lot of numbers being thrown around. We talk about them all the time as well on the Capital News podcast, but it's good to get a visual, and that's exactly what this is. So please like, share, subscribe. Check us out on our website, The Capital News, our Capital News site on YouTube and Apple Podcasts, or you can follow us on Twitter at the following handle as well. You can also support us by buying our book, The Cynic's Guide to Investing in the Era of Too Big to Fail. It Pays to Be a Cynic. The playbook that was utilized a decade ago has now been used at warp speed as we speak. So if you want to understand how the economy functions, what the Federal Reserve is and does, how the federal government works with the Federal Reserve, buy this book. If you want to understand how to put it all together to build a diversified portfolio, you want this book in your library. The Cynic's Guide to Investing in the Era of Too Big to Fail. It Pays to Be a Cynic. Thank you so much for joining me again. Please like, share, subscribe. Check us out on our website, The Capital News. Stay diversified, stay vigilant, and stay with The Capital News. I am Alex Koritis. Godspeed.